Outside Nigeria, global stocks were wavering earlier today towards their worst month since September, although futures markets predicted a strong tech earnings will spark a Wall Street relief rally later in the day that will help traders recoup some losses. MSCI's Broadex Index of Asia global stocks was down by 3.3% for the month, although 0.17% higher on the day. World equities have slid this month as hopes of rapid Fed rate cuts this year drained from the market following a series of hotter than expected U.S. inflation readings. Wall Street's tech-heavy Nasdaq 100 was more than 1% higher, while those on the benchmark S&P 500 index rose by 0.8% after earnings from Alphabet and Microsoft beat estimate. In Europe, the benchmark stock 600 share index rose by 0.6%, still heading for a 1.4% monthly drop. Elsewhere, Asia stocks outside Japan added 0.8%, and Tokyo's Topix rose by 0.9%. U.S. economy cooled more than expected in the first quarter of the year, but remained healthy by historical standards. Economic growth has slowed steadily over the past 12 months, which forecasts tells that lower interest rate is here. But the Federal Reserve has made it clear it is no rush to cut rates. According to the country's Department of Commerce, gross domestic product, which measures all the services and goods produced in the economy, measured an annualized rate of 1.6%, weakest pace of growth compared to the second quarter of 2022 when the economy contracted. A sharp increase in import, which subtracts from GDP, contributed to the slowdown in growth from the fourth quarter, shaving off nearly an entire percentage point. Spending on import jumped to a 7.2% rate from 2.2% in the fourth quarter. And in Japan, where the Bank of Japan kept its interest rate unchanged and projecting inflation to stay near a 2% target in the next 3 years, signaling its readiness to hike borrowing costs later this year. As expected, the BoJ maintained its short-term interest rate target at a range of 0 to 0.1% in a unanimous vote. In a quarterly forecast, the board projected inflation stripping away the effects of fresh food and fuel costs to hit 1.9% in the current fiscal year that began in April, followed by 1.9% in fiscal 2025 and 2.1% in 2026. The central bank ended 8 years of negative rates and other remnants of its unorthodox policy last month, making a historic shift away from decades of massive monetary stimulus that was aimed at quashing deflation and revitalizing growth. And in the crude oil space, prices may run this week in the green as the U.S. Treasury suggested the weak first quarter GDP data may be revisable and as supply concerns persisted. U.S. West Texas Intermediate crude rose to sell at $83.87 per barrel with an upward price margin of 0.36%. Brent crude futures also experienced an upsurge of 0.26%, selling at $89.24 per barrel. And Bonnet Life recorded a downward price margin of 1.03%, selling at $88.40 per barrel. And for the OPEC basket, crude oil dealers offer $88.45 per barrel with an uptick of 2.24%. Well, and that does it for business. Coming up next is sport. Please stay with us.